I'm Charlotte McLeod with the Investing News Network, and here today with me is Eric Coffin, editor at Rock Analyst. Thank you for joining me today.
Thanks for inviting me, Charlotte.
I want to start by talking about gold. We are halfway through the year right now, and many people are wondering whether the Fed will raise interest rates again. What are your thoughts on that?
I think we might see an increase in December. I'm not convinced we'll see one in September. For the last month, the Fed's been sort of jawboning pretty hard about doing a couple more increases. Their stated reason was that inflation was accelerating. That's kind of blown up in their face pretty badly, actually, in the last month. Inflation's gone very much in the other direction. That said, my belief is that they weren't jawboning because they were really worried about inflation. They were jawboning because the asset market scared the crap out of them. I don't really blame them on that, but they basically don't want to get the next crash attached to them. So they're trying to blow the froth off the market. I think that's really why they're talking about rate increases. I do think in September we'll see them probably start reducing their balance sheet. That's not an official rate increase, obviously, but it may, depending on how much they do, because the Fed is a big buyer in the bond market. If they reverse those flows and start becoming a seller rather than a buyer, they may effectively raise market yields. The official FOMC rate won't go up, but they might push yields up. I think they're going to be pretty careful about that, though. I don't think they want to push things too hard. So I would say if we see a rate increase, it's December, and I'm not totally sold on that because to me it looks like the U.S. economy's decelerating slightly, not going over a cliff or anything, but it's decelerating. I'm not sure they're going to have a good argument for raising rates in December. I think the only reason they'll do it is because they really, 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 really want to have some ammunition the next time the economy rolls over, because right now they really don't have many bullets if they have to do something.
Any other gold price catalysts that people should be watching?
Interest rates are the big one. Mm-hmm. I mean, obviously the U.S. dollar is a big one, but these things are all joined at the hip. Mm-hmm. I do point out to readers that although most gold bugs, harp on the dollar, it's not the negative correlation actually varies quite widely. It isn't always perfectly negative. It isn't even always negative. There's times when it's positive. In my mind, the biggest driver to interest rates is actually real, not nominal, but real interest rates, inflation adjusted. If you look at the recent trend, you saw a big move up in real inflation-adjusted interest rates for two reasons. One, because the Fed was jawboning and because they did do one rate increase, but also because the inflation rate decreased. As the inflation rate drops, real interest rates go up because you're basically taking the stated nominal rate, subtracting inflation. If the inflation went from over 2% to about 1.3%, I don't think it's going to get a lot lower than that. If we do see a move up, and one of the things that would help that would be to say the oil price going back up, anything like that brought the inflation rate back up, that will actually suppress real interest rates. That may be a good driver. Even if the Fed doesn't do anything, you could still see real interest rates turn around, and that's, to my mind, a very big driver of the gold price. The other thing that would help, I guess, a correction in New York would help the gold price. Right now, the markets are 100% risk on. Like, there's no insurance. Nobody cares. It's just, 100% no cash, balls to the wall, buy everything in sight. If traders got spooked a little bit, I think you'd probably see a little more money flow into gold and gold equities. I think the reason why the markets are so risk on and so bullish right now, it's part of the reason why gold miners have not exactly had a great year. They've been underperforming the bullion price. And I think a lot of that's just, there is no risk sentiment right now. People are not worried at all. So I think, the market proverbially slapping people upside the head would probably give us a better market.
For the gold price, what does all that mean? I checked this morning and we were up about 10% year to date. In the second half of the year, similar or not at all like that?
I wasn't expecting the gold price to do a lot. I'm hoping to see it get on the other side of 1,300, but I think it would take either and maybe both of those things, like a correction in New York, not a crash, like just a 5-10%, wake everybody up a little bit. But if we do see And in all honesty, I can't say I see a lot of drivers for it, but if we see an increase in inflation enough to sort of roll over the real interest rates again, and any combination of inflation going up and the market recognizing, which I think it will at some point, that growth in the U.S. is actually being decelerating again, that will help the gold price. I don't think it'll take much to get up to, say, 1,300, 1,350. Beyond that, I'm not going to pretend I can really see that happening easily. Not right away, anyway.
You mentioned gold stocks have not been doing too well.
Yeah.
Summer is typically a time when we see lots of drilling. Is there any drill results you're waiting for right now?
Yeah, there's lots of them. One thing I'll point out to people too, and this is coming out of conversations with a large number of companies. We're seeing a situation similar to what we saw in 2011. It's not quite as extreme, but we are seeing a real slowdown at the assay labs. Turnaround times have gone from, they were probably 2 weeks at the start of the year. Now they're 4 to 5. I think they'll be 6 or 7 by the time we get to the end of August. And that's a big extension. I mean, and I'm saying that to people partially so that you recognize that your favorite company that's drilling, don't freak out if they said, we're going to have assays in 3 weeks, and 3 weeks and 3 days from then you don't see assays, you hit the panic button. A lot of companies, this reporting is going to be way more stretched out. The upside of that is our exploration reporting season is going to be pretty long, I think, this year.
Okay.
Like Northern Explorers, I think you'll see drill results into December, January this year because of labs being stretched out like that. There's a bunch of companies that I'm waiting for results from. One company that's been drilling for a couple of months. I know the drilling initially was pretty slow, but I've got a high hopes for their holes. That's a company called Regulus Resources, which is drilling in Peru. They already have a big resource, but it's the kind of project that could generate some really impressive holes. One company that's here at the Sprott show that I follow, that has been reporting, they'll be drilling, I think, for the foreseeable future. That's a company called Alma Minerals. They've got a big porphyry project in Mexico on the Veracruz side. They've got a couple of new areas that they haven't drilled before that they're going to start drilling in a couple of weeks. One of them is called Rea Trimbrillo. These are all on one project, but the surface sampling in that area looks really impressive. So they've already put out some good holes, and the stock's doing fine. But I kind of got high hopes for that area in particular. A couple of earlier stage ones, a company that I'm probably the main proponent of, I guess, called Atamara. They're drilling in northeast Washington State. Marco Lababa, great guy, put a lot of time and effort and blood, sweat, and tears into rethinking the whole area. I'm trying to kind of get my subscribers to relax a bit because, one, I know for a fact he's got a lab turnaround issue because I've talked to him recently and he was very frustrated at how few assays he's gotten back. But it's also he's drilling about 15 or 20 targets. I think there's a very good odds he's going to hit one of those targets. I have no idea whether it's going to be target number 2 or target number 17. So, I mean, I was pounding the table on that thing a year ago at a nickel. When I got up above 20 cents, I was telling subscribers, like, take money off the table, like zero out your costs, and then just, give the guy a chance to drill this thing. So, I mean, that's one. Another one where we've gotten some holes and I'm expecting more, but I'm kind of looking more forward to their next drill program. It's a company called San Marco, which is in Sonora in Mexico. Colorado Resources is another company here. Adam's just started this year's program. He's always been a great arm waver and a great geologist, so he'll have interesting stuff to say. A company in the Tethyan Belt that I follow here called Mondoro. Tio has 2 drill programs going right now to report from. So there's a lot of stuff coming, but I just want to reiterate this whole thing with every time I talk to company CEOs, the assay time is lengthened a week. So I got a feeling stuff's going to be late this year, so don't panic.
Okay. Patience sounds very key. Last month, in June, the GDXJ rebalancing, do investors need to worry about that still, or?
I think it's done. So, I do think that was a big problem. I think it impacted things a lot more than people realized or expected. It's probably, in a sense, it's probably still hurting the market because I think a lot of people that buy GDX, GDXJ, they're not really people that follow the sector. I mean, they're just buying a sector bet on gold. They're not people that really follow the companies. It's an ETF. Because of that, I don't think most people that buy that really even pay particularly close attention to the companies that make up the index. And when they saw it trading as bad as it did, and it was trading horribly compared to the gold price, I think that spooked a lot of people. And I think one of the reasons, one of the other reasons for continued underperformance of gold producers is that rebalancing, where a lot of people outside the sector, they don't know why. All they know is that the gold stocks behaved horribly compared to the gold price, and they were just like, okay, I'm out. I think that's probably hurting. So in that sense, the rebalancing's done. At that level, we don't have to worry about it. The trades have been done. But there's probably still a bit of drag where it freaked a lot of people out.
Okay. Last question. Talked lots about gold, but are there any other commodities you're watching right now, and what makes them compelling?
I do follow a number of base metal stories as well. I've been pounding the table on zinc for a year now. I think, the zinc price moved from, the 70s, went up to about $1.35, and early this year fell back to about $1.10. It's back to about $1.28 now. I think we're going to see it go through the February high in the next month or so. I think this zinc cycle will probably see a higher high than the one before, the one sort of in the early aughts, if you will, that ended at about 2007. The high, sort of a spike high then, was about $2 a pound. I think we see a higher one this time, and I think it probably lasts longer because there's just so little in the pipeline. Aside from Glencore restarting 500,000 tons of production, which isn't small, but that in and of itself isn't going to solve the problem. I mean, we need new mines in the pipeline, and by and large they're not there. I think there's about a 2-year window where we could see very strong zinc prices.
Okay, and no worries about China bringing more production back on, or no?
Well, I mean, we haven't seen it. I'm one of those guys. I mean, I think John Kaiser and I are in agreement on this, that we've always felt that although yes, there's a lot of zinc there, a lot of the zinc mines are small mom and pop operations. I mean, they're crappy mines at every level. The grades aren't good. They're horrible when it comes to pollution and the way they're operated. I think John and I are both in agreement that we've felt for some time that Beijing is quite serious when they're talking about cracking down on pollution. I mean, China has gotten a 500 million person middle class in the last 10 years by Chinese standards, and those people have a different set of concerns than they had when they were all making $2 a day. I mean, they're basically middle class now. They've got kids. They're saying, you can't be dumping this shit in the rivers anymore. Like, we can't be doing this. And I think Beijing's actually serious about that. I mean, you saw about a month and a half ago, they basically forced a couple of reorganizations in the smelter industry where they took 10 or 15 relatively small smelter groups, smushed them together, and this is China. It's not like they asked. They said, this is what you're going to do. And in the process of doing that, 4 or 5 of the most inefficient, dirtiest smelters, they just shut them down. And when you look at things like what are the TCRCs, and that's the treatment and refining charges, if there was a lot of supply in China coming out of wherever, you would have seen the treatment and refining charges go up, because basically the more supply there is, the more it's sort of a buyer's market for a smelter. So they charge more to take your concentrate and turn it into metal. When it's a seller's market for the miners, when they have the hammer, you see those things drop because you've got these different smelters competing for the same concentrate, so they're outbidding each other. And although you've seen a bit of a move up in the last little while, by historic standards, TCRCs are very low, and that's telling you there is not a lot of concentrate floating around in China. Plus, the other thing you've seen is a fairly big increase in imports of refined zinc. And normally you don't see China importing any refined zinc because they're the world's biggest zinc producer. Mm-hmm. The fact they're importing refined zinc tells me they're users. They're having trouble getting metal. So that's a good thing for me. It's not a good thing for them.
Okay, well, that's all from me. Thank you so much for joining me today. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Eric Coffin.